up, everybody? Welcome to the June 15th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're going to get right into those hot button market issues, so let's get started. First, we're going to start off with SpaceX. You probably, if you've watched the financial markets at all, because it's all they've been talking about for the better part of a week, you know the SpaceX IPO happened, and it actually ended up relatively successful for SpaceX. They generated the most money ever from an IPO listing. The stock was up significantly the first day, and it looks like it's following up with a second day of relative positive performance as well. So good for them. SpaceX is now a 1.75 trillion valuation, and Elon Musk is now a trillionaire, on paper at least. So a lot of interesting stuff there. And I really think that this is going to set off, and we've already seen it, is I think this is going to set off a bigger IPO calendar, is that Anthropic and OpenAI, Anthropic house Claude, they developed Claude, and OpenAI has ChatGPT. Both of them have now filed for IPOs coming. They don't have specific dates, but they have filed the necessary paperwork to start that process. So they will be out at some point, and they are estimated to be trillion-dollar valuation companies as well. So there is an appetite for going public. You also saw this with public companies already, and the effect of Alphabet went to the public markets to generate more revenue or to generate some funding for their projects as they see going forward as well. So they went to the public markets for the first time in a long time too. So I think there is just an appetite for greater mechanisms of generating some wealth and generating some public interest in these IPO companies. And I think the calendar with those three alone will be one of the biggest calendar years ever in IPO history. So I think that, there was a lot of time here recently, I would say, in the past 5, maybe even 10 years, where a lot of companies stayed public for long, or stayed private, for longer. And I think that's still the case. I think, the legacy of private before going IPO tends to be a little longer now than it has been in history before. But there is now an appetite to at least exploring and going public among these very, very large private companies. Whereas before, some thought maybe they would stay private forever. Well, that doesn't seem to be the case now, and we'll see who is next after these three. There's not as much, I would say, size beyond these three, but it is interesting from companies that become innovative in the private area and really start to explore and have some success, if they will accelerate their IPO calendar based upon the successes of these three. And again, Anthropic and OpenAI, not guaranteed to be as successful as the SpaceX IPO, but I think it does give them at least a little bit more room and a little bit more confidence that there is public appetite for these companies. Turning to number 2, I believe the market is now pricing in that the Iran conflict is done. If you look at oil prices today, I've talked a lot before about oil being kind of that $60 to $80 range, is kind of that comfort area. In the normalization area where where it's not extraordinarily expensive for consumers, but companies can still earn a profit. And that tends to be in that $60 to $80 range. That is kind of the comfort area, in my opinion. And we're below $80 at this point now for oil prices. So we are now in that comfort range, which would suggest that at least the impact and influence of anything future in Iran is going to have a minimal impact on oil. Again, this could change with one strike, with one change in tone, with one change in rhetoric. It is certainly not, from a political side and from the details component of it, it's certainly not done, but the market is pricing in that this conflict will not have a material impact on future earnings, on future oil prices, a significant re-ramp of oil prices. That is not being priced in at this time. It is much more priced that this conflict is over, which takes away a negative component of what people, again, kind of a bear case scenario of oil being consistently above that $100 to $120 area. It takes away that bear case. If we're in a more normalized range for oil prices, we can sustain that, given that, again, relatively low unemployment, wages that are still growing, they're growing less than inflation, but also this acts as a a potential alleviation of the headwind of inflation that we've seen here over the last couple of months. So it's good news. There's no question about it. I think ending conflicts is always good news. But it also, from a market's perspective, again, we're just checking off more and more of these bear cases at this point right now, where there's less and less determination on that about what the next thing would be. Now, again, the next thing is usually that really causes market havoc is usually the thing you don't see coming, right? It's the punch you don't see that knocks you out. But from the side of what we can see, there's just less and less because if inflation starts to turn the other way, if we're peaking it now and really starts to turn the other way towards more normalization, we have, obviously midterm elections coming up, but we have a lot of things, especially in the earnings trajectory. Again, I've talked about this many times. The earnings trajectory is still very strong for corporate earnings in the S&P 500. So if that is still a natural tailwind, then the only real heavy bear case right there is valuation. And that's a tough one, especially in the next 6 to 12 months, and saying, because you can pretty easily refute that valuation does not tell you a ton about what's going to happen in the next 6 to 12 months. So again, we're watching this, but I think the market certainly at this point right now is pricing in that the Iran conflict is not going to have an effect, not much of a material effect going forward. Number 3, we have a Fed meeting this week. So we'll be interested to see. It's the Kevin Warsh. It's the first Fed meeting that a new Fed chairman will be coming out afterwards and talking about what they've talked about, the decisions they've made, and the trajectory going forward. It'll also set the stage for how he provides commentary. And there has been some discussion that he may be less disclosure oriented than his predecessors. We'll see. We don't know, what that change in trajectory will be, if they're dot plotting and if there's less dot plotting or whatever they may be doing. We'll find out. I think, Fed communication and transparency is very important. I think it allows the market to digest things and there's less surprises as a result. But we'll see what his communication activity and commentary suggest. But we'll also see if there's any action or commentary around, again, from my opinion, I don't think there's a lot of avenue and capability right now or a lot of appetite for easing. There just doesn't seem to be a scenario for that. We have a very low unemployment. The jobs rates have been, the jobs growth numbers have been growing again. And we have persistently high inflation. So that doesn't seem to be an area where we would be easing. I would be interested to see, given the administration's view on interest rates, on how he balances that thought process with the actions they take going forward. So it'll be an interesting commentary. I don't think anything's going to happen from a Fed interest rate change perspective, but it will be interesting to see the post commentary to see what we're in the midst of going forward. Lastly, in number 4, you all know I'm a pretty huge NBA fan. I just want to say congratulations to the Knicks and to New York City. 53 years is a long time to wait for anything. As a Minnesota fan, we haven't won anything since 1991. So that's 35 years at this point. I'm starting to think if we'll never see a championship in Minnesota again. And so I have to assume that Knicks at 53 years and living in New York for a couple of years and knowing some people there, really, the Knicks are probably the closest thing to a city team. The Yankees are pretty close, but the Yankees and Mets do split that a little bit. I don't think the Knicks and the Nets split that really at all. It's much more of a Knicks city. Sorry, Nets fans. I think it's a heavy Knicks city. So congratulations to them. Congratulations to Karl Anthony Towns, who was a Minnesota Timberwolf for a very long period of time and who got a kind of a bad rap here. At worst, he was maybe a little ingenuine or it wasn't terribly genuine, spoke in a lot of, cliches and maybe was a little bit corny, but who cares? I mean, he was a great basketball player when he was here and he took a pretty bad rap. So for him to go to New York and enjoy and embrace and become a champion there, congrats to him. And I wish him the best and best to you all in the Knicks, New York City. But we'll see you as a Timberwolves fan next year. So that's all I have for this week. Tune in next week where we'll have our next hot button topics. But until then, thank you very much. Take care.